Good morning, everyone. Thank you for the confirmation of the sound. Good morning, Bogdan. Thank you, Raul, Darren, and Tomas for your welcome and confirmations. So, welcome, everyone. Today, on Tuesday, the 2nd of July, a new trading month. I hope you had a great month of June and great results in that month. I hope July will be even better. July should be still okay, I guess, but we are getting into a bit of a summer month, of course. But usually, I guess the August is a bit more choppier than usual than any other trading month. So take that into account. This week is a bit tricky as well, but we'll take a look at the calendar just in a second. Before we do that, we're just going to go through this PowerPoint, as you know, to go first of all through the risk disclaimer and explaining that global financial markets is considered high risk and may not be suitable for all investors. Please be aware of that and speak to it or visit an independent financial advisor for more information on that. This video and webinar is for educational purposes only. All right, so thanks for your attention on that. So, hosted by Admiral Markets, of course. Take a look at your website. I'll show you what your website is in just a second. My name is Chris Svorcik. We're taking a look at the account, my account together, and my charts. We're taking a look at especially breakout trades. And here's just some examples of breakouts on this 4-hour chart. We'll be using especially trend lines, for example, on 1 hour, 4 hour. But we'll take a look at intraday trades too, and maybe long-term position trades as well. If there's someone who's interested in that, we'll take a look at that. All right. So we'll try to focus on all three trading groups. Basically, maybe not that much on scalping. I mean, it's more, if anything, an intraday trade. All right, and take a look at Admiral Markets at Facebook or Twitter, and let's take a look at the calendar. Alrighty, as I said, this week is a bit tricky. Well, first of all, it's the first week of the month, so there's a bit of a tad more risk there, in my experience at least. So it depends how much you really want to focus on risk measurements, but to me, usually the first and last of something of any time frame is more risk. All right, I've talked about it before, but just in case you're maybe visiting us or this training room for the first time. So the Aussie had an interest rate, and it stayed the same. But the Aussie did fall. It was technically set for a fall, in my opinion, because it looked like a correction to the upside, right, in a downtrend. So 1 second. Just give me 1 second. Apologies for that, but that was my dad, and he knows I have a webinar, so I thought it could be something urgent, but it wasn't. He just forgot. So sorry about that. He's not the youngest, so his memory is unfortunately not always optimal. Let's see. So to continue, we have later this week. It is a bit tricky because we have tomorrow, for example, ADP. We have Thursday we have euro and pound interest rates plus a day off in the US. And Friday, of course, the event of all events, we have NFP. So basically a very tricky week, especially with NFP, always very high risk, okay? But you're probably aware of that, but just want to emphasize that. Otherwise, we do have pound construction PMI, which is medium. I don't know, that I would rank it probably as high impact, but I guess that's arbitrary. So with that said, let's move on and go to the pound first. We're going to take a look at the London Open trade. Alrighty, we're going to look at the 89. This is a bit annoying. We're going to take a look at the 50-minute world and see the direction of the 89 EMA, right, to see if there's any direction at all. If so, we'll only take breakouts in the direction of the trend, which is defined by that 89 EMA. To be honest, this looks more flat to me. I mean, there's a bit of a slope to the downside. Anyhow, the price already broke above this consolidation area, so Doesn't look to be valid, so no setup here today. Last week we did have one right on Thursday. I skipped it, but it did. I think it did break to the downside eventually, if I remember correctly. Anyhow, thing of the past, not so interesting to look now. Looks like a bit of a trouble here for the pound to keep going lower. We had maybe a break of this trend line, for example, just like the euro, but didn't get much follow through this morning, and we're already above that trend line again. So definitely more looking like a false break. And if we zoom into the 1 hour chart and look at recent price action, you can see that we're moving above that 2 hours ago high. That doesn't signal that much good for the bearishness. We're still in a downtrend. I'll take this out. Let me take everything off so we start from a fresh point of view. Let me say it this way. So that doesn't bear too well for the bears who lost control basically of the high of, what is it, the hour before European Open. So it looks like a false move down, and we're going to move up now. That is counter trend because the downtrend definitely down. Look at the moving averages. Price is nicely below them. Any retrace up to the moving averages was a good retrace and kept on going down. So from a larger perspective, we had a massive wick on the top of the month of June, to be honest. The euro too. I mean massive. I know that probably no one looks at the monthly chart, but I do every end of the month, and it's just massive. Look at that. It's the open and close just equal to each other, up, down. So that's a lot of selling pressure there, and that to me gives a good indication, I think, that we could have a bearish July. In any case, closing lower than last month, June's close makes a lot of sense to me. But the only thing what could happen this month is that we trace that wick before we find resistance and then move down. So basically, for me, it's simple. I could just fib this candle. We shouldn't break above that last month's high. Otherwise, the whole idea is invalidated. And any of these points, any of these fibs, this monthly fib should be resistance, to be honest. Anywhere in here. Any of these fibs could be the turning spot. All right. I do think that maybe a bit deeper fib would make sense, like the 618, for example, to be honest, maybe in 3 waves and then down. All right. That seems destined to me. And from a technical point of view, we have a nice impulse down here. Let me zoom out a bit. Nice impulse down, right? And we have good correction here. All right. So anyhow, that's the pound. I don't want to elaborate too long, otherwise some of you might get bored here. But for me, it's very useful to do this long-term analysis just to get a feel of what direction we could have and what we can get. All right. But we're going to take a look at some intraday trades just in a second. I just want to finish this pound anyhow. I started with the pound, so let me just finish it. Okay. Bear with me for those of you who find this boring. So this is nice impulse. This is a good correction. And if you then fib the downside here, got a 618 hit. So that could be the big downside. All right. But even if it's downside here, the question is, we could always get a hook back before we move down, first of all. Or what could also happen is actually, and this is becoming less likely to be honest, that this whole correction gets expanded like this. All right. Now, considering the sharp move down here, I think that option is getting less and less likely. And the option of this is becoming more likely. But in both scenarios, there is a bounce to the upside somewhere in here, most likely. So this is, in any case, definitely a high level of support somewhere in here. I mean, it could definitely make still one more fall, a bit lower to the 886, for example, of this entire move up. All right, we stopped at 786. Let me get rid of this fib. And let me get rid of the down fib for the moment. And you can see we stopped nicely at these fibs if you fib this upside. All right, the 382, 50, 786. So one more fall to the 886 is nothing. That's definitely possible. Always possible. And then we can make that upside. In any case, my point is that any move down will encounter support, most likely. In both cases, there's always a scenario where we just break and run. That's fine too. If we break this bottom, I'll gladly look for a smaller time frame break, some hook back, and then I'll rejoin the shorters. No problem. Really no problem at all. Therefore, this bottom is key. This is, of course, our key top, but that's far away anyhow. 886 is important as well. That could be the bouncing area for that upside. And then we'll be retesting this top, something like this. And then either we go up or we go down. All right, down is more likely. So with that said, the 786 bounce, to me, could be already the point that we make that upside. So maybe, for example, if we zoom into yesterday's candle, you can see a nice high and low. And a break of the low could be a good indication that we're making that one more fall, or a break of yesterday's high, we might be making that bigger correction to the upside. So I have those two lines. Let me make them blue. Or, yeah, whatever, blue. Alrighty, let's go to the 4-hour chart. So that high of yesterday is actually a top on the 4-hour world, right? Which makes sense. All right, and yesterday's low is 151.80-ish approximately. So one of these two will break. I think that will give an indication of what we could expect sometime soon. The upside is counter trend. Downside is with the trend. If we were to break the top, yesterday's high, and then hook back, then in the meantime, actually, we're building in an uptrend because they were having higher highs and higher lows on the 4-hour chart already, right? So then it would definitely differ. Once you break this top and then get another higher low, you can see clearly getting a trend change direction there, all right? So we can see on the 4-hour chart something of 9 waves, which makes sense. In the other wave, which means that you have an extended wave 3 probably, and that too would give an idea that we're going to make a bigger correction here to the upside. All right. Anything else? Well, we had a bullish day candle, by the way. No, not really. Okay, no, that's about it. 1-hour chart. As I said, this looks definitely like a false move before European Open, but there's a lot of movement to crack, or levels to crack before we really are clearly in the upside. We'll definitely, if we break this high by 8 pips, we'll definitely retrace from there. So that could be an interesting way to trade this pound, because first let it break yesterday's high. It will break it by 8 pips normally, and if it does, that could be an indication of upside. But I wouldn't take it there. I would definitely be more careful, because usually when you break it by 8 pips, you actually get the opposite on the pound. You're going to move down, and then somewhere here could be a very low risk long for maybe something of a target in somewhere. Let's say, well, let's put a fib on to be more precise. Somewhere around this minus 618, 153, or the 152.70, those would be the targets. Well, probably more this one. Something like this could happen. All right. So, the most, in that regard, the most kind of the best reward to risk trade, which usually you want to catch if you're intraday trading it. I mean, if you're scalping it, you would want to catch all these turns, but if you're intraday trading it, you want to focus on the one or two moves that have the best possibility of making that one movement a day, which is the major movement. Usually there's only one major movement. The rest is just like oscillating, bouncing up and down. As an intraday trader, you want to catch that one move that makes 80 pips, that one move that makes 60 pips, kind of in a fast, impulsive way, within normally a relatively short time frame. And there's a webinar actually in the educational side of the archive on Admiral Markets website, where you will see a webinar about GU characteristics, by the way. So as an intraday trader, you have to kind of like think where would be that best move. And to me, at the moment, it would be probably when we bounce here to this target. That seems to be like the juiciest slice of daily price action we could get. Because once we break the high, there is a likelihood of continuation, and then if you make that dip, you're getting a significant risk reduction, and the target is something definitely I would say that the minus 618 around 153 is doable, which means that this is approximately an 80 to 100 pip movement, which, to be honest, really you cannot normally get more in one day unless there's really something very big going on. Maybe you have some days that move more. Some days you have a daily candle of 150 pips to 200 is already a big candle. Plus the fact that usually you don't catch the exact low and catch the exact high, right? The daily low to the daily high could be 150 pips, but how much effectively can you catch in one direction of that 150 pips? You don't normally pick the exact high and pick the exact low, so you kind of lose some pips on the bottom and the top, so the juiciest part you get left over is maybe 75 to 80, really the max, as I said. And that usually is only one direction that you can catch, and is usually only once a day to catch that once. I mean, otherwise you're really scalping, basically. Now you can catch less pips in one direction, which is probably also very likely, but I'm saying this is the best results you can get if you're trying to intraday trade it with one position. All right. That would seem the most likely scenario, but let's say if that doesn't happen, maybe I'm totally wrong, and we're still in a downtrend, right? So I'm assuming a bigger correction, in a way. But how about if I'm wrong? Let's see. How would I want to trade it? What kind of signals would I want to see if we continue downwards? Well, basically now price action to me is quite bullish. I mean, if you look at the 1 hour candles, you just see, oh, sorry about that. You just see, I mean, you just see very nicely, very bullish candles, right? You see closes very near the high, right? Just a small, not even a wick really, it's just a pip off the high, right? 2 hour bullish candles. I wouldn't want to short that personally, even if we're in a downtrend. And it's two bullish price actions. Oh, in my opinion, all right? So I would really want to see either a break of 151.83, which was yesterday's low. All right, that's how I would trade it. Or if there's really a significant 1 hour price action signal, maybe a rejection wick off yesterday's high of 152.50, that would also maybe change things. All right, but that's the only way. Otherwise, definitely not touching the short and not going long either right here with 18 pips below or 15 pips below yesterday's high. As you know, I don't like to go long just before a daily high. I wouldn't recommend it. I think that if you just follow that rule, that would already improve your trading by 50%. Don't go long before a high, daily high, and don't go short before a daily low. would already help you substantially. All right, that's an easy rule and would be a big help already. So, you know, maybe yesterday would have been a bit different in the sense that yesterday if we would have maybe made this fib here, taking a chance on a fib could still make sense maybe, because we were so clearly entrenched in this downtrend. But now we, in this case, it's a bit different, I guess, because it looks like we're expanding, especially this rejection here, showing me that we can maybe expand it. Plus the bullish price action. I think this fib is really not. I mean, 786 we could pause there still, but that would be just a retracement in my opinion. Yeah, funny enough, the 786 is exactly 8 pips above this high, which ties into the 8 pip rule of the pound. All right, well, that's about it. I guess maybe we can move on to take a quick look at the euro. To be honest, the euro really has the same situation going on. It has the same monthly wick at the top. It has the same downtrend. It's just the whole long-term picture is a bit different because while pound was in a massive downtrend and making a neat three-wave correction, the euro is kind of stuck in a wedgie type of formation, right? So a bit different there. Then again, within the wedge, we made a very strong down move, but had a very bullish day yesterday, actually. And actually, the euro broke yesterday's high already. Here, you can see 130.72 got broken. So this too, I would either be looking for a potential break of this line, although it's a tricky one, but that could work. And if it does break that black line, I would only be really very careful with my targets and really not want more than 130.15, to be honest, because that could be still a bouncing spot. That was yesterday's low, and it could be definitely a bouncing spot. All right, so break of that trend line could be interesting. We actually had a pretty bullish candles as well on the euro. We broke yesterday's high, so this could be already better set for, already set for upside actually. But I will wait for the pound to break, I think, personally, because if you look at the euro pound, where's my euro pound? The euro pound is actually right at the top. So that's a bit iffy. You know, if I had to choose between the euro and pound, I would rather go for the pound at the moment, just because the euro pound is right at the top. If the euro pound would break the top and go above these levels, these key levels, like you see, they're very nicely respected. You know, then things start to change because then the euro looks strong. At the moment, the euro is strong, but we're right at a major resistance, which definitely could see this euro pound go back to this trend line, or maybe even these orange lines again, and stay within this wedge, right? Who says it couldn't stay within this range? That means there's a lot of pound strength versus euro, potentially, if it does make that down move. And if you had to choose between the euro and pound, then for upside, then you would logically want pound, right? So with that said, that's why I want to wait for the pound, all right? Just because of the euro pound analysis already in the back of my mind that I'm showing you now. But if it does break this major resistance levels, right? Well, then things start to change. That's always a potential that it does break, but you know that's always part of the deal. They sometimes break, but wouldn't assume it necessarily until it happens. That's why. So it is interesting. I mean, if you caught that, I don't know if Tuesday. I don't remember, to be honest, but I remember telling some friends of mine that this is right at. If you look at the day chart, by the way, just at the euro pound, you kind of see three levels. You see these tops. Basically here, you see these bottoms, and you see kind of a middle line, which is the tops and bottoms are respected, especially here, the tops and the bottoms here. And the funny thing was, so we're definitely ranging, right? We're bouncing up and down between these levels. And this was an awesome range trade. I don't know if you range trade at all, but if you do, this was a classical one. Right back to these bottoms, you see, right back to, and boom, bounce. That was a great. If you picked the bottom, it was really a really great reward to risk there with range trade there. I don't know if I said it here. I forgot, but that was really a massive one. Anyhow, we're back here, so who knows? We can maybe make the same fall. All right. I'm not much of a range trader, but that was a nice one. So that's the euro pound and the pound dollar and euro pound, basically, this triangle. Oh wait, one thing. I'll take a look at the 50-minute world and the 5, but I want to do the 5 minutes actually here, right? Yeah. So this is the 5-minute trade setup, right? We're looking for moving average, stochastics to be oversold, and the price to move back to moving average, basically, right? These moving averages. So stochastics isn't oversold yet, but it looks like we're moving to these moving averages very fast, very impulsively, actually. Maybe we're going back to support. So the idea would be if this is back here and we're bouncing off moving averages, that would be a good trade to the upside. But moving pretty quickly here. Although if you look at the 1-hour chart, it's just retracing last hour's candle, really, right? So let's keep an eye on that. That's the 5-minute world, and this is the 1-hour world. Let's see, what is this? 144. We are back at a resistance level here at the 144 EMA. Alrighty. Just taking a quick look at the moving averages, basically, on the 50-minute world euro dollar. Because we hit that resistance level, I want to see, I'm just curious how price will react to that level. To be honest, looking at, we're making higher highs and higher lows on this 50-minute world. So we'll probably bounce here up and down. Then the question is, we'll get a downside break, to be honest, or an upside break. I think from an analysis point of view, we'll probably get that upside break. Yeah, seems more likely to me. But I'm going to wait for that pound. That's basically what it all boils down to. Let's take a look. Alrighty. So that's that. Let's move on to maybe some trend lines I was thinking. I'm going to take a look at trend lines if you don't mind on the 1-hour chart. I'll just quickly go through all the charts basically. What I'm looking for is some nice trend lines on the 1-hour chart that have the potential of being broken. All right, and see if that's interesting to trade in this session. Graham has a question before we do that. If we can load the Fib webinar, we definitely could, and I will drop a note to someone there. So 1 second. All right. So I told Graham, I told my contact person about that Fib webinar, okay? And someone's asking about gold. We certainly can do that. Let's start with gold then, all right? And I will make that a round of all the currencies and trend lines. I'm in the mood to trade the 1-hour chart today, the 1-hour trend line. So I hope we can see some nice trend lines on all these currencies. Okay. We'll keep an eye on this pound as well, for those of you who like the intraday trading. Let's see, gold. Let's see. Alrighty, let me get rid of this. yeah, we still made a pretty good fall, right, on Thursday actually, Thursday and Friday. Still continued a few dollars, 50 almost to the downside. And then we made an aggressive turn here with some bullish price action. And that wasn't surprising at all. This break was anticipated. We talked about it here as well, right? We said look out for this break of these bear flags. It's going down, and we had a few more actually. Although the last one is a bit tricky. With the space is definitely not that much anymore. If you made already such a big move, to me personally, now let me get rid of this bigger fib here. I have a 50, this big fib on the entire move up here, basically on gold. Just to get an idea where the 50 fib is, and that's around 1,080, 1,086, 1,100, something like that. That's the 50 fib, folks, of the entire move up. All right, so that's huge, not a small level, and that could definitely be a bouncing spot. All right, definitely a level to be aware of because that could spark a new rally on gold, in my opinion. Yes, that's true, Bogdan. I think definitely the currency is now retracing to test the moving averages. I totally agree with that analysis, Bogdan. And I think one more break of a low is very likely. Doesn't have to be, but it does look very likely to me. I mean, this could be easily a 1-2 here, and then this is potentially a wave 3 with 5 waves. This is a wave 4, and we're in a wave 5 potentially. Within a wave 5, we could be making a 1, 2, 3, 4, 5. So it looks like it could be the 5th wave of the 5th wave left, basically. And if you take that analysis into account and you fib the wave 1, we hit the minus 1,000 target. And if you take that analysis into account, the 5th wave could be equal to the 1st wave. The 1st wave is approximately $157. So if it were to stop at the 50 fib minus $157, you're at around 1140. If it stops at the 382, you're around 1120, something like that. The 3rd wave is approximately, of the wave 5, is 250. So it shouldn't, well, most likely wouldn't be longer than 250. So if you subtract 250 from 1273, that's something like 1,020 or 1,050. So anywhere, as you see, between 1,050 and 1,150 seems a likely area, just with the counting the sizes of the wave. Furthermore, we have, if you remember, I was telling you that we had that big 50 at 1,080, right? So that's definitely an area where it could go to. And if we then look at this fib, we have a minus 272 target at 1112. Could be a bouncing area as well. So there's definitely reasons to say that if it goes in that area, it could be bouncing at around 1100, right? Now the question is, will it go to 1100? And I think yes, just because of the other wave count, also because of the fact that, to be honest, the aggressiveness in this move down is still very high. It's not like we're like inching forward and we're making like this falling wedge. It's a falling wedge with divergence, and well, maybe there's divergence here, but it's so an aggressive move down in terms of price action, how much momentum it's making. That furthermore also this is definitely a wave 3 of 3 or 5 of 3 because of this is the fastest move down of the whole move down. So this is the most impulsive, which means that usually you still get 2 bottom breaks. That's a very easy rule. You don't have to know anything about LED waves, but you still know the most important part. That's a cool trick, isn't it? I got your attention there, maybe, because most of you are probably sleeping when I talk about LED waves. But that's a very, very easy trick, and you will know a lot of information. All right. Just find the most impulsive part. On the lower time frame, you'll see that if we go to the 4-hour chart, see how powerful this move. Oh, sorry, I deleted my own chart. 1 second. All right. You see here how powerful this MACD is here, and how fast price moved down. That's the most impulsive part. Which means typically it's a wave 3, which means typically you have at least one bottom break after that for wave 5. But sometimes 2 bottom breaks because wave 3 can be extended. And then you have 2 bottom breaks, 2 wave 5s. This is the case. We already had 1 bottom break, which I already said it's going to be at least 1 bottom break, but I think 2. So 1 more bottom break of this bottom is likely, especially if you look at how aggressive this down move was. So maybe maybe in that regard, if this is indeed a move down and this is a move down, we should typically not go above this level, 1338, which is the 618 fib of this down move. That's the max. Normally we shouldn't. Normally a typical move would be anywhere between the 382 fib and the 1274 or the 50 at 1306. That's where we should get resistance and make a move down. And if we move above these fibs, it's getting questionable. And if we move above 618, then the whole thing, my analysis is out of the window. That's it. So thanks for your attention on that. Let's move on. Julia, if you have a question, just let me know. All right? Yes, indeed, Bogdan, I agree. It will be a new point to enter in the market to sell. It looks very good for that. Yeah, you might want to wait for some price action at the 382 fib, but the 50 fib should be definitely something where it gets a good bounce. Yeah, this is gold, which is XAU USD indeed. Yes. No, Julia. Then you missed my point. 1338 is not the main bouncing spot. I think the 382 fib is the main turning spot, to be honest. 1275. The high likelihood it could turn there. The 50 fib, that could be a high likelihood of bouncing, although I don't think we necessarily will get there. Let me say it this way. Although looking at the aggressiveness of this up move, we could get there. Usually speaking, 382 is the spot for downside in wave 4. 50 fib would be the second spot. $618, not usual, very unlikely. The only thing I meant is that if we go above 618, then my whole analysis is out of the window. Something else is going on. We'll have to take a look again. We have to revisit, reanalyze it. Maybe in the meantime, we've probably done something like this, to be honest. Maybe the whole situation is changing and we're making an uptrend. Then we'll have to adjust the analysis accordingly. But so definitely wouldn't say that the move is likely going to 1338. In my opinion, not. It's what I wanted to say is that that's really the invalidation level of where my whole analysis is out of the window, that 1340 level. But the 382 with 50 are most likely bouncing spots for that downside. Although it is moving quite aggressively to the upside, so because of that, maybe the 50 becomes a bit more likely than usual, but still, both are resistance spots. Okay, great, Julia. Great. So that should answer your question, Raul, too, because 1275, 1305 are my resistance spots, and 1340, which is the major last level. All right. So let's take a look at. I'll just go by one, okay? Take a look at all these charts. Well, let me take a look at pound first. Hasn't gone anywhere. All right. Made a good up move here. Let's see, 94. 40 pips so far. So let's see. Maybe that it could be a bit tricky, this trade. It could happen in New York, to be honest. That's a bit tricky. You know, there's no rush, to be honest. If you want to intraday trade this, if you want to catch one trade on this pound dollar, there's no rush because this thing is moving up and the trend is down. So there's definitely no rush. The only rush you might want to have is if there's a breakout trade in the direction of the trend and it's breaking now, maybe. But otherwise, there's never any rush. And it doesn't make sense to go long here, 15 pips before yesterday's high. All right, and it doesn't make sense to go short with this price action. So I know it's difficult maybe for some of you to be, to have that patience to wait for things to set up. I'm sure some of you are thinking like, I want to trade now, but the sooner you get rid of that and the sooner you develop patience, I'm not saying, probably most of you don't have that, but some of you are probably thinking that, the better your trading will be, believe me. By the way, someone asked me about 8 pip. Richard asked me about 8 pip. There's a video on GU characteristics in the archive, and it will explain everything. But the pound on the intraday level likes to break highs and lows by 8 pips and then do the opposite. Let's take a look at this example. For example, here, 152.01 is the low. Where does it turn? 151.93. I don't know if you can see it. It's not always like that, but many times it does happen. Even here. It's not always like that, but especially early in the sessions, like here, for example, not when you get a really impulsive move. That's what you have to be really careful of. All right, it's if you get a sustainable break or the true move of the day, then the rule doesn't apply because then it moves, then it keeps on moving. All right, so you have to be careful of that. So let's move on. Euro pound. Back at the top of this this wedge or sideways move. Looking at the impulse here that we're having, any hook back here could actually be an interesting short. Or if you caught it right in here, or some a break of this low maybe. But it's not really when I'm looking at trend lines, I'm more looking for trends and breakout with the trend, not much for a retracement. So I mean with range trades. So for example, something like this, I would normally not do. Although it's nothing wrong with it, it's not typically what I look for. But if you did, then great job. New Zealand dollar, let's see. Broke out of this trend line here this morning, actually. Kind of stuck in this wedge. Maybe a trend line here as well. Flat, very flat. Let's zoom in. Yeah, so we broke out of this trend line already this morning, right? When the Aussie had its interest rate decision. Right? So that stayed the same, right? 2.75, but this could be a hook back maybe. It's a bit different trade. So potentially a break, pull back to the 618. Let me just put this on a 1 hour chart. Take a look at the 4 hour world. just taking a look at this 4-hour chart here. Still in the downtrend if you connect those tops. AO is back to the zero line. That's what I like about it. That could mean that we make a continuation of the trend, or at least a fall back to this support level, maybe this bottom, more or less. I lost my, here it is, sorry. Let's see. Pretty bullish day yesterday, to be honest. If you look at the price action on the day chart. But we can definitely retrace yesterday's candle. We just have to be aware of yesterday's low, which is 77.26. We don't have any divergence between these bottoms, which is good for the downside. We do have a lot of price action here, which is not, which is a bit strange, because typically if you have that much price action, you usually get a bit of bigger retrace maybe before you either continue or go up. But strange part is that it's really a bullish candle. That is quite aggressive. Then again, look at that. Look at this bullish candle here and here, and all of them got smacked to the downside, right? So day candles are not everything either. That's clear. We have a clean break of this trend line and a hook back. So it's something that I'm seriously considering. Just trying to catch all the angles, see if there's anything, like for example that day candle that is a bit shaky. Trying to see if there's anything that is not set up well. Trying to make a balance to see if this is a good resistance spot that the currency could move down to. We have pretty good bullish price action right on the 1-hour chart. This 1-hour moving average is quite flat, so there's not much direction, which is kind of like logical if you look at this recent price action on the 1-hour chart. It's just going sideways in a way. On the 4-hour chart, there's still a downtrend officially, just because of this previous big, massive fall on Friday. But ever since, we've just gone sideways, and that's reflected in the 1-hour chart, right? So that makes it a bit tricky. That's why we definitely any shorts should be very conservative in their target area and take profit aiming, and take profit before yesterday's low. All right, because otherwise that take profit is not getting realistic, and is really kind of a bit speculative on that break of the bottom, which could happen, but might definitely not happen as well. All right, so any take profits should be aware of that. So that's how you can make realistic take profits, basically. You have to be always modest and analyze whether the likelihood of that take profit being hit within the time frame you want the trade to develop is realistic. If you want to trade that closes today, then definitely be aware of yesterday's low. If you want to trade that's closed this week, then you can aim a bit further. But then be careful with your stop loss, that it has a realistic stop loss as well, right? If you're aiming for a trade to to close the trade within, let's say, a few candlesticks, no matter what time frame, irrespective of the time frame, but you want it to close within a few candlesticks, you can have a tight stop loss, especially if you expect to break out soon. If you're catching a trade that you think will develop, will take longer to develop, more than 5 candlesticks, then a wider stop loss would be good. It's all the relationship between time and price. There's always that relationship. And a lot of traders don't realize actually that they don't understand that relationship, and they're like taking I had actually a one-on-one call with a trader yesterday, and he had a perfect example in the CAD, and I'll show you in a second, but I want to finish this first before I wander off my thoughts too much. But please hang on to that, because I think that will be, just looking at that example would help you a lot in your trading. And you'll know why maybe your stop loss gets taken out and then the trade goes your way. Keeping an eye on this new Kiwi 5-minute, 50-minute charts, right? I like the 50-minute candle here that moved down. I want to see if we can break this high, basically. We did. Okay, forget it. Because if we didn't break that high, that looked like a pretty good 15-minute, pretty good 15-minute candle here. So that could have been maybe the signal that we're respecting the 618 fib for downside. We respected the 618 in a way, but we didn't get that continuation I was looking for. Let me say it this way. See? We're pushing above it. So I'll be careful again. There's bullish price action, so I don't want to short it unless I really have some confirmation of a turn at this trend line. It's a very nice trend line. It was a good break. Looks like a good look back, but I'd rather wait for price action signaling here that confirms that. And we did have it on the 50-minute, but we didn't have any follow-through. Basically, we had a break of that high, so I'd rather wait now again. You see my point, right? We have 1 hour nice trend line. We're in a downtrend. Downtrend, good trend line, good pullback against the trend. We have a break of that trend line back in the original direction of the downtrend, right? Good. We got a hook back to that trend line. So to the 618 fib, that's where we definitely could continue down again, right? But instead of just assuming that, I'd rather wait for some confirmation. We didn't get that. We broke last hour's high. You see that as well? And now still in a waiting mode, basically. Does that make sense to everyone? What I just did there, so I filtered out basically what looked like a great pullback. Still could be a great pullback, but not yet. Let me say it this way. Makes sense, right? I think. So if anyone has questions, let me know. Otherwise, I'll move on to the next currency. Just wanted to pause there to see if we can catch anything live. How's the pound doing? Pound is moving down. Let's move on to the Aussie. Here too, actually, we had a great trend line break, but that was news driven, right? This wall just like the Kiwi, by the way. But it was technically set up nicely for that break. Look at that. Good trend line this morning. Nice break. This too could be a hook back, actually. So I'll want to keep an eye on this one as well. Great, Richard. Have a great day too, and good trading today, okay? Hope to see you tomorrow. Just saying goodbye there to Richard, who has to leave. So that is nice. Nice trend line break and hook back too, all right? But here too, would like to see some confirmation of that. So let's move on. If you do see that confirmation, just let me know, okay? Just write a chat to me, and we can take a look at that, okay? Because I'm only really focusing on this chart. I don't have any other charts I'll look at, otherwise I'll get distracted, and I really want to have the focus for you. This is the Euro Yen. Got a lot of trend lines here, and we broke A lot of them I see. All these trend lines we broke. Broke the high as well here. Looking good. So let's see. We're in an uptrend. Do we have anything of a trend line? No. We cannot put any trend line. Why? Because it's just one straight move. So we need something like this. And then we can put a trend line on the top and then wait for the break, right? So there's no really trend line on the EJ. You could, well, I mean, you could put a trend line like this, but that just didn't give you any information except it broke and continued up, right? So it's too steep to draw a trend line, and we're in an uptrend. I'm not looking to trade it to the downside. So pound yen is the same. Dollar Swiss franc. Dollar Swiss franc, kind of, this trend line is just an indication. It's a break. We're in an uptrend, so I'm not looking for a break to the downside. I'm just having this trend line on the chart to get an idea where we could bounce maybe to the upside. All right, that's all. Kind of had double top here, but we're still in this sideways mess. So we could see a continuation now. It's quite an expansive, quite a big area already. So we could see that bounce here. We had a small breakthrough here, which we went back into the consolidation zone. Do you see that? Break back into the sideways box. So if we break now, we should see a sustainable break. The second go through, right? The second push through is usually sustainable, and the first one is the one that's could be a false. The second one is normally not a false one. But that looks pretty good actually. Let's see. It's not kind of the trade I was hoping to catch. I was looking for trend lines. It's not a trend line break because here too. Why is it not a trend line break? Because we don't have anything to put a trend line on, right? There's no structure. It's just up, down. There's not a correction. This was a great trend line break here, right? That was a great trend line here. Nice break, or nice trend line, not a nice break. It took quite a long time before we get that move. A few hours of sideways move here, but eventually it did break. That was a good trend line. I like that. All right. So we talked about trend lines and trend channels. So on Thursday, I hope you enjoyed that webinar. Maybe it's already uploaded. So if you didn't, you can maybe find it in the archive. And you'll use, that's one of my favorite ways of trading actually. So we'll use that more often. That's why I chose the trend line to look at 1 hour trend lines this morning. Because we talked about it last Thursday, so it seemed like an optimal moment to reinforce or use that tool actually. And I hope you enjoyed it because it's one of my favorite ways of trading, the 1 hour with the trend line actually. So this is not a 1 hour trend line, but it is just a potential breakout in the sense that it's breaking out of this high here. So maybe next hour. Let's wait. I will wait 15 minutes. Maybe if it retraces a bit here, somewhere halfway here, it could be a very small risk for a potential bounce. It is breaking above this high. That's good. So there could be a small trade here to maybe here somewhere. All right, we can put a fib on this last move up, see where the target could be. Target maybe the 95.30 area. All right, so let's take a look at the Swissy later on. How's the pound doing? Still moving down. How's the euro doing? Wow, euro is moving down a lot. Ooh, it's engulfing the price action of the last hour. Interesting. And it's actually breaking this trend line. Wow. Interesting here. Let's see, 1 hour chart. It did touch that resistance line, as I said. So it looks like it's breaking to the downside, to be honest. I thought it would break to the upside, but now we're engulfing the last 2 price hours of price action. We're actually making lower lows here on the 50-minute world. That looks bearish now, in fact. If we would have stayed above 130.55, 58, 130.60 maybe, on the 5-minute chart, you would see that better. If we would have stayed above that level, these moving averages basically, it could have been our 5-minute setup for upside. Now it's becoming iffy because we're breaking this trend line, breaking these supports. So a small, maybe just a tad more down and a hook back, that could be a bit short actually. Looks like we're breaking through support. I would just still wait a bit to see because it's a bit early maybe to conclude that. I mean, it's just we're still right there actually. We broke through this level, but I would want to still see a break of this 130.54. I mean, it's just a pip under it. That's still it's right there. Let's see if we can make that just that 10 pip push here to confirm it. Otherwise, it's still iffy, and it could still actually be an area of a bounce. So we're right at the talking spot. Is it going to break or bounce here? That's pretty interesting. Okay, cheers, Alcana. Have a great day, okay? Alrighty. So let's keep an eye on that one. I have a comment from Bogdan on the Swissy. If it's at a point of buying, yeah, I agree. That's why I totally thought the same. To be honest, Bogdan, I said, I don't know if you heard me, but I said it's breaking this high here, where I have the green circle of the 1 hour chart, and we're in uptrend. And although it's not really the trade I was looking for, I was more looking for a breakout trade like this blue line. It is indeed a potential, still a break. It's a different break, not a trend line break, but it's still a potential of making that upside to 195.30 maybe. Indeed, I agree. The only thing is that I was thinking maybe you could take it right here, in fact, I think. If you wanted to, it's possible with the stop loss maybe here. Right. The only thing I was thinking of is that maybe if it traces halfway this candle and could get a bit cheaper bounce, but it's kind of quite a detail maybe. But sometimes these details do save some pips. But it could continue without making that retrace. So, but definitely, yeah, good job there, Bogdan. Let us continue. You see, it just keeps on pushing. That's why sometimes using fractals instead of retracements is useful. It's always a tricky balance, Do you take the breakout or do you take the retracement? Most of the time, a lot of times currencies retrace, but there are moments when it really gets, when it really gets a lot of energy and a lot of power in the market where the currency doesn't retrace and just keeps on going, right? Just keeps on going. And then a breakout is good, right? Or a breakout of a fractal. So that's always a bit of a tricky estimate. Alrighty, this is the yen, and let's see. Arturos was asking about that, and we're right at the 618 fib of this down move. Now, basically, we're now back in uptrend, where we were in uptrend on the week chart already. If you look at this weekly chart, and if you follow the fractals, you can easily see higher highs, higher lows. higher highs, higher lows, higher highs, higher lows, higher highs, a low, no, higher high, and this is still a higher low, funny enough. Despite the massive 1,000 pip down move in today's chart, 4-hour chart down move, on the week chart, it's still a retrace. It's still an uptrend, funny enough. And now we have weekly candles with higher highs, higher lows. We actually broke last week's candle's high. And this day chart definitely clear, showing an uptrend. We broke out of this downtrend line. So this was a great 1,000 pip downtrend, but on the week chart, it's still a correction, funny enough. And we got a bounce right at support. Broke the trend line, so we're definitely in uptrend now. The only reason why I have this fib here, and there's only one reason, is because it could be potential resistance. You see that we stopped exactly at the 50 fib here? See that? So that's why I still have that fib on. All right. Just in case on the weekly chart we could be making this before we make up a bigger correction, something like that. Then the 886, between the 886 and the top, maybe just a bit above the top would be resistance, and somewhere in here would be support again, and we can make this motion of a correction. It's possible. So that's why I have that fib on. All right. We have also a bit of bullish hidden divergence here between these tops and these bottoms, which is bullish. All right. So definitely bullish. The question is, can we break above the 618 fib here? Right where we are. We could maybe make the move to the 786, or we're going to make a bigger correction to these support levels in here or in here. So only longs are interesting either from lower, from the two blue lines, or a break of the green line. Okay, well that makes sense. I mean, what Arturos did was just go short, shorting the 618 fib. That makes sense because that is a level of resistance that is highly respected. It is a highly likelihood of a bounce. So that's always, potential there of catching pips. Makes sense. So it depends what kind of trader you are. If you're a fib trader, that makes a lot of sense. All right, you could lose on this one, but generally speaking, the most fibs get respected, just like this 50. Right. So a take profit Arturos is depends how big your stop loss is. How big is your stop loss? If and how much you want to get out of it. I mean, this is definitely still a support level, and it could go like this. But then again, I wouldn't target that. That's such a small level. Your stop loss is at 100. Well, I would go to, wouldn't it make sense to go like to 100? Okay. Yeah, okay. Well, I would probably go just a bit above that psychological 100 number, but not a big deal, I guess. But that's what I would do. But that set aside, where did you enter? 99.80 or something like that. 20 pips. Well, if you target this 4-hour fractal, it's at 99.50. It's only 31 pips versus a 20 risk. That's definitely not worth it, in my opinion. It's only 1.5 reward to risk. I wouldn't go for that. I would definitely aim, if I were you, for let's see, something that gives you a good reward for that risk, because this is a substantial risk. You're basically shorting it in an uptrend market, which means that despite the fact that there's a fib, there's a substantial risk involved, and you need to be compensated for that risk. You need to get your mileage out of it to justify that trade. If you go for a small reward, it's iffy. You can do it 10 times, and how much do you really win from that trade? maybe a bit, but if you go for a higher target, one that's still realistic, if you get the bigger retrace, then that makes more sense, in my opinion. So you're basically, the only reason I would take the 618 is if you expect the least to move to the 382, which is 97.63. My opinion, but I know that other people do trade differently. If you think that the 1.5 to 1 at 99.52, that support level, or 99.56 to get a 1 to 1 is the most realistic, and you want to book that profit, then there's nothing wrong with it. I know that Toronto goes for smaller pip sizes. I mean, he doesn't necessarily go for 100 pips, right? Like this would be, then I just or 200 pips, actually. He goes for smaller levels like that. So it all depends on your preference. But this level is definitely a support. If we break that support, then the next support is all the way here on the 4-hour chart. So you can see a lot of space once we break that level. You see what I mean, right? A lot of space to break that fall, with maybe some support in here at those tops. So you could, at 98.50, you could move your trade to +1 and hope to get to 97.60. All right, Arthur, that's great. Yeah, the 4-hour resistance level, indeed, it's not even actually a fractal yet. This 4-hour candle has to close. It's a very shaky one. It's a tremendous up move. It's just a very small pause here. Then again, there is quite a big bullish price action signal. Look at that 4-hour candle. That's the only thing that's worrying me a bit. But then again, it is moving pretty fast. We get some engulfing 1-hour candles. I think it's if you really break this low, that could be a good one. The question is, do we break it? You never know. And in your case, I think it only justifies it if you really go for a good target. All right, definitely. Cool. For me, there's nothing to do now because I'm not interested in the downside personally. But let's take a look at the Euro CAD. Just because I'm looking for trend line breaks. That's my focus of today. Let's see. Euro CAD had a pretty good trend line break in here. Or here. Multiple of them. All right, so, but nothing now. It broke those. It's on the move. We need to wait again. Let's continue to the pound Swissy. That's stuck in the wedge. Wow, look at that. We've been reviewing this pound Swissy and we said, look at this. It's stuck in the top line. It's stuck in the bottom line. And it's going to break either to the downside and make this fall here and continue this downtrend channel basically, right? Or it's going to break that downtrend channel and make it move up to the bigger wedge, maybe respect that, and either move down again or break to the upside. But it's still stuck, and the space is getting very small. You can see there's only a very small space here left. So still on the sidelines for that. Dollar CAD might have a trend line there. Let's see. Something like that. Yeah. Let's take a look at this. I need only 2 minutes of your time, okay? And no problem to this, by the way. No problem. I hope it helps. And I hope you get the trade. That'll be cool. It's 200 pipper for 20 pip risk. That sounds like a good R2R to me. 10 to 1 is always nice. So I just need, I think, you will learn a lot from this. Let me say this, I think. I got a question yesterday from a trader who was asking me about a trade that went wrong, a loss. And you do, you do learn a lot from those. So it's a great thing that he was, so willing to learn from that. But what happened was that he was looking at let's see, 1 hour chart here, I think. Or was it? Wait a second. Was it the cat? Excuse me. No, I don't think it was. Sorry about that. No, it was the cat. Okay, I was looking at a different chart, but and it was set up a bit differently, that's why. Anyhow, what it boils down to is this. Doesn't matter. What it boils down to is this. He took a breakout trade somewhere in here. It's a bit different setup, but he took basically a break of the fractal somewhere where I have that green circle. And the thing was that actually on this 1 hour chart, he had already obtained a 2.5 reward to 1 risk. All right, which is great actually. So basically there was an up move. Let's make a schematic, and he took the next break, and he entered here, put the stop loss here, and was already up 2.5 to 1, which means that really the price traveled quite far, right, compared to that risk box. This is the risk. And so there was 2.5 times that. So you can imagine 1, 2, 2.5, something like that, right? I guess like 2.5 to 1. Alrighty. So it moved all the way up there. Price was all the way up there, and price came from lower. The bottom, the real bottom, was somewhere in here, where I have the pink line. Now you might know this, but if you're on a 1 hour chart and you catch something like that, the best is to take profit, because that 1 hour up move that nicely moved in one shot to the upside is going to stall at one point, and you're going to get a bigger correction at one point or another, right? That bigger correction could have different types. It could be slow, methodical, bull flag, or it could be something more aggressive, like a zigzag that moves quicker down, right? All right. The point is that if you don't move to break that trade to take your profit, or if you don't make it to break even, you have the risk that when you get that bigger retrace, your stop loss gets taken out, and then you see the currency go to the upside. All right. It's very vital to check if you didn't catch the first take profit level, to check if your stop loss isn't in danger of getting taken out in a bigger retrace. His stop loss, in this case, was right in the middle, or let's say around a third of that up move, of the entire up move. Let's do another schematic where we have the up move and then the retrace. Let me do that again. Here was the bottom, the up move, and then you got the retrace, and then you got another up move. Basically, he caught it where I have the blue entry, and he had a stop loss here, which was a great trade for the first move up, right? You can see that. But when he got the bigger retrace, his stop loss was all of a sudden in the middle of the move if you zoom out to the 4 hour chart. On the 4 hour chart, this up move was one move, basically, right? This was one move. Let me put the blue lines there. That was one move. And he caught part of that action on the 1 hour chart, all right? But the thing is that on the 4 hour, when this 1 hour up move was over, you got a 4 hour retrace. And the stop loss wasn't sufficient enough for the 4 hour retrace. It was halfway that total up move. If he wanted to keep that trade, he should have actually, he had to either check if his stop loss was underneath a level that would be respected on the 4 hour chart. If so, he could still leave the trade on. That's fine. Or if that stop loss wasn't there, take the trade off for profit or move the stop loss to break even. Never move the stop loss under that level, because then you're widening your risk. Either take the profit or move it to break even. If the stop loss would have been on that second spot and the correct spot for the 4-hour chart, then you can leave it there. But he hadn't. He had it at place number 1, which was halfway the 4-hour move. And then the stop loss is in danger. Let's take a look at this CAD, and you'll see that, let's say he took it somewhere in here where I have the green circle, and he had the stop loss, sorry, where I have the green circle in here, and he had the stop loss here. What he should have done was take profit somewhere in here, or at least move it to break even. What happened was that you got a bigger retrace, took out a stop loss, but then still went up to the target, right to the 618 target. So although he got a great trade within this move up, because he didn't catch the profit within that move, he got taken out by this retrace, and that retrace was really nothing substantial. It didn't even break this, it didn't even come close to this bottom, nor let alone break it. It's just that he had an incorrect stop loss for the position of the currency and the retracement it made on a higher time frame. What he should have done was look at the 4-hour chart and say, it could be retracing this up move. I have a stop loss halfway here. It could easily go back to the 618 fib, which it did, take me out and then go up. My stop loss isn't at the sufficient spot of place number 2, so I should take my profit and move to plus 1, or move to plus 1, take profit, and enter a new trade at the 618 fib, new entry order with the correct position size and the stop loss under here. So you will have the currency making an impulse and a big correction. That impulse is fast, the correction is normally long. What usually most traders end up losing money is that they catch an impulse either at the top, or if they catch it at the right spot, they don't take profit at the end of the impulse, and their stop loss isn't well protected for the next higher time frame, which takes out their stop loss, and then they see it go up their way. This alone will save you so much. You have no idea. If you properly think about it and use it, you'll start to see it, and you'll have a perfect understanding of time-price relationship, and it will save you a lot of trades that take you out and then go your way. This alone is invaluable information. If you've never thought about it, maybe you've already known, you already realized that. That's great. If you haven't, look at this. Everything is time price. No one realizes it. Time price, time price, time price. So if you see, for example, an hour chart, and you see that 1, 2, 3, this move already is more than 5 hours. It hasn't broken this top for 5 hours. That means that this impulse is most likely toast, and we're going to get a bigger correction. All right, so you can take profit when it retests this top and get that profit right in here, and then re-enter at the 618 fib if you wanted to, with the stop loss, proper stop loss. If an impulse stops on your time frame, always zoom out one time frame and check where's the next support. If your stop loss is halfway there, and you see a 4-hour support under an uptrend under your entry, you're in danger of being taken out. If your stop loss is under that 4-hour fractal, you took the trade based on the 1-hour world, but the 1-hour impulse is over and you're getting a 1-hour correction, a big correction, and your stop loss is under the 4-hour support, you're fine, or you have a high likelihood of being fine. All right? Does that make sense? Does anyone understand that? This is the Euro odd, by the way. Does everyone? I just want to really see if everyone understands that. So if you can write a Y, That'd be great. This is the euro out, by the way. Okay, cool. Great, 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 great. Got a few yeses. So I hope it's new. If not, no problem. But I hope someone learned something from that. Because that's really, it will help you with understanding why sometimes your stop loss gets taken out. Not sure what you mean, Yao, about that. Qual MME. What does the MME stand for? Sorry about that. I don't know exactly what you mean there. So we're getting a bounce on the euro, by the way. And we are getting a bounce on the pound. So let's see how that goes on. Yeah, I don't think it's going to happen. How's the euro looking like here? Okay, that's a pity. It went, as I said, it kind of went a bit more than I hoped for. If it would have bounced somewhere earlier, I didn't catch it here. It was iffy, as I said. Like it was kind of threatening to break through, which made me more bearish. If it did, if it would have bounced a bit earlier, maybe here I would have been looking for a long, to be honest. But it kind of just exceeded a bit more than I was hoping for. I don't understand that language. Sorry, Yoa. Sorry about that, but no idea what you're saying. Yeah, but it did receive here the overextended. So anyhow, it's passed, but it is moving up, which makes sense to me. So as I said, basically, for me, still the same plan on this pound dollar. I want to wait for this. Something like this would be perfect. Right in here. Let's see. I'll just continue with, how's the New Zealand doing actually? The Aussie is still moving up. And New Zealand is moving, it had a pretty, that's interesting, it had a pretty interesting 1 hour candle here. Do you see that? Off the 786 fib, but then it's moving up again. It's quite drastic upside. Really looks like it wants to push. So I'll be careful with that at the moment. It's really testing this last hour high. If it breaks that, I'm going to wait again. I mean, the 1 hour signal, 1 hour candlestick is not bad here actually, right? Right at the 786. Looks pretty good. We pushed through it, but again we pushed through it, so that's not good. So let's see. Pound odd I think has a great trend line actually. Something like this maybe, or maybe even this one, to be honest. No, that's not so good. But maybe this one. It's kind of in a wedge here. So a break of any size is good for up, or maybe it's counter trend, but maybe even to the downside. It is a bit risky because it's still, in my book, still in a day chart, it's still an uptrend. Although 4 hour chart is definitely making a big correction. So that's why I'm interested in both sides, to be honest. This break or this break, right? That could be interesting. That's the pound odd. Same for the euro New Zealand. Same for the euro New Zealand, basically, I guess. Also has a pretty cool bottom trend line here. So here too we're at a talking spot. Either a break to the upside or that break to the downside. Both are interesting. I know it doesn't happen to me usually, but in this case it does make sense. So we're kind of quite tight in this, getting quite tight here in this wedge, right? So a break will probably happen soon. What else? CAD, maybe this trend line on the CAD could be interesting. We have a trend line here as well, but I'm not sure if I'm interested in that because we're quite in an uptrend here on the CAD. And we have recently higher highs and higher lows as well, right? So not interested in a downside. Sorry, now that's to counter trend, but different. It's different on the Euro New Zealand pound New Zealand because it's at a talking spot. So the Euro New Zealand pound odd, they look interesting. Maybe the pound New Zealand, not sure. Quite the same. Not really. Pound odd, Euro New Zealand probably the most interesting. Then the Euro odd probably. Only if we break probably this top here, the blue line. CAD could be good upside. If we break, pound Swiss we already talked about, the top and bottom line, we're still stuck in that. Euro CAD, nothing yet. Dollar Swiss, maybe if we trace this to, let's see, maybe it's quite iffy, to be honest, because it's gone sideways for so long, but the break is going to happen eventually. It is a small risk compared to the reward. If we put it here 46, it's only 20 pips. All right. Pound yen, euro yen. Yahoo Andranda, I have no idea what you're saying, so I apologize, but I don't speak that language, so you can write to me, but no comprende. I don't understand. Oz is going up. It's Portuguese. Yeah, I don't speak it, unfortunately. So those are the most interesting trend lines, I guess, today. The euro pound is moving to the downside, the range trade. So yeah, those three, I think, to be honest, and maybe the odd or New Zealand hook back, but they are moving upside pretty much. Not that good. Euro dollar is already breaking to the downside. Wow. Let's take a look at that. Engulfing bearish candles. So a break of that last hour low could see that fall. We have a support here. So anything that breaks that level, those levels around 134.90, 130.49, 130.53, any break of that and a hook back would seem a good fall until somewhere in here. It's a small trade, maybe 25, 30 pips move in here before we bump into something of a more support at 130.15. Not much space there, but it could make something like that. So somewhere in here there could be a good short there, but only if we break these levels, in my opinion. How's the pound doing? Also pretty bearish price action signal on the 1 hour chart actually. I don't know what this line is. Let's take charts. There's not much space, but it is in a downtrend. So, you know, I was really looking for a break of this high. It doesn't look like we're going to get it. Plus, we have a 1 hour price action signal right in here. All right, so that could be, it could make a small fall here. Definitely could, or maybe even break this low by 8 pips and bounce off this level, for example. Right? It could make that move. So it is a potential. You know, confirmation of that would probably be a break of that. a low, and then you have a small space in here. It's not the biggest space, but it is possible. Or if it still does move up and it breaks the high in here, right? The yesterday's high, we were talking about the daily high. Somewhere in here could be good long. So it's one of the two. Depends which one we break. Are we going to break this daily high, or are we going to break this bottom that we have in place here on the intraday level for a small fall here? This small fall is quite small. I mean, it's not much space. You know, so not much space there, but that will be important. This one or the daily high. All right, that's about it, I guess, for today. Someone is asking about technical indicators. We're going to be having a webinar actually on technical indicators. I think this week. Not sure about that. Technical indicator is just an indicator here. Like you just go to insert indicators. You can go to anything like, for example, any of these are indicators. I don't know. There's no difference in my opinion. MACD, RSI, stuff like that. All right. We'll talk about that in the webinar. Let's see if I missed any other comments. Adam is interested in these Euro odd, definitely. You know, those are pretty interesting there. I agree. You know, definitely. I'm going to keep an eye on this Aussie, see or in New Zealand, see if we get a turn again to the downside, and see if we get that continuation for more fall in here. All right. Doesn't look so now, but you never know. Maybe later on. I would be interested in that. It's with the trend, so that would be cool. Any other comments on this? That's about it. All right. Well, we're going to wrap it up then. I'll keep an eye on this Euro New Zealand pound odd dollar CAD because those are the trend lines I like. And this hook back, you know, for trend line breaks. And the New Zealand and Aussie, we already broke the trend line. We had the trend line breaks already in the past, but looking if we get the pullback in continuation, basically. And the pound, yeah, we'll keep an eye on the downside break or the upside break and hook back, basically. Downside break is with the trend, but a small space in my opinion, although with the trend. So upside is a bit counter trendist, right? That's about it. Well, I hope you had a great weekend, by the way. I forgot to ask. I hope you had a good time to relax and get ready for this month of July. It just started, right? So there's a lot of trades that are going to happen the next. I mean, this trading month is going to have basically 23 trading days, a lot of days to catch pips. And you don't need many trades to really be profitable, right? You just need to make sure that those few that you catch are good, and you can be making a handsome profit. I made only a couple trades last week, and I still made a few percent profit. Just on, you know, a couple of trades I really liked. That's it. Not always am I that cautious, but because it was the last week of the month, I was a bit more cautious than usual. So just waiting for good trend lines and good trend line breaks, and having the patience for that. You know, patience, believe me, is well rewarded in the Forex market. So that should be enough. Bogdan caught a cold. Hate that, especially in the summer. If it's your summertime, I don't know, maybe if you live in northern hemisphere at least. Always annoying. I'm going to take a day off on Thursday, by the way, because it's an American public holiday, and not that I live in America, but I haven't basically taken off any days this year yet, so I'm going to take Thursday and Friday off. I'm going for a small weekend away. I had a trip planned in May, but the whole thing got canceled because the weather was so bad. That was horrible. So I'm finally going away. about time because I didn't do anything this year yet. I mean, like vacation-wise. So Thursday we will not have a session, all right? We're going to have a session tomorrow, as usual. And we're going to have an educational webinar, not Thursday at 6 p.m. Central European time, but Wednesday, one day earlier, all right? So we'll have 2 sessions tomorrow, the morning and European morning and European evening, but nothing on Thursday, all right? So that's going to wrap it up then. I thank everyone for being here and hope to see you tomorrow in both sessions. But you're going to answer one question from Bogdan regarding what do I think about 4. Not sure what you mean, Bogdan, what I think about 4. Thanks, Vitatus. Have a great day too, huh? Bogdan, what do I think about 4? Not sure what you mean. For what? For 4 o'clock? For the day of 4? Ah, the 4th of July. Stupid, sorry. I'm stupid. Sorry. Yeah, sorry. I didn't get it. Well, there is a reason why I took 4th and 5th off is because they're interest rate days and NFP, and I don't mind skipping those days, to be honest, especially at the beginning of the month, especially with the whole trading month to go. I'm like, that seems like optimal time for me just to take some time off for me. As I said, I didn't take any off anyhow, and if I looked at the schedule, I'm like, well, those 2 days I can skip, you know, because it's like NFP. I'm not really a big NFP trader, and I don't like interest rate days either. So for me, skipping those days is really not a problem. So those are perfect days for me. You can expect movements, I think, even if the U.S. has a day off just because of the interest rates. I think there will be some movements based on the press conferences and stuff like that, you know. So I think you will see movements, especially on NFP, as usual. And it depends what type of trader you are. If you like that movement, and you know, if you're trying to catch a big position trade, you might want to trade. If you're trying to intraday trade, you might want to skip it because of that. Or if you're an NFP trader, that would be prime time for you. It all depends, of course. Okay, cheers, Arturas. Okay, have a great day too. So that depends, but there should be some movement despite the bank holiday on the 4th because of the interest rate days. Yeah, see you tomorrow. Huh? Have a great day too. So to you, Bogdan, too, and to all of you, and I'm going to close it then. And have a great trading, have a great trading day. Sorry, and a great day. Cheers.